Thanks, Brooke. So welcome everyone to today's training webinar on the first generation Homebuyers Community Down Payment Assistance Fund. This training is brought to you by the Midwest Minnesota Community Development Corporation, MMCDC, the Minnesota Mortgage Association, and the Minnesota Homeownership Center. Now, I wanted to just say one thing before we really start this webinar, and that's that this is the First Generation Homebuyers Community Down Payment Assistance Fund. We are not doing the training on the Minnesota Housing First Generation Homebuyers Fund. There's two different First Generation Homebuyer Down Payment Assistance programs out there right now, or coming, I should say. There's this one and Minnesota Housing's. We're going to talk about this one today. Minnesota Housing will have their own training coming up soon. Brooke, you want to advance the slide? All right, so my name is Bill Schweitz. I'm Vice President of Community Relations with Summit Mortgage Corporation. I also serve as the co-chair of the Government Affairs Committee for the Minnesota Mortgage Association. A little background, I started in the mortgage business way back in 1982, and I pretty much had been an originator and some sort of manager level at different levels throughout those years, and I retired from originating in 2022. And I'm really excited to be presenting today with my friend Brooke Walker of the Minnesota Homeownership Center. Brooke, why don't you tell us about yourself?
Thanks, Bill. So hello again, everyone. I'm Brooke Walker. I'm with the Minnesota Homeownership Center, and I am the Director of Strategic Initiatives and have been working with Bill and many others to support this effort of bringing this program to market. So the Minnesota Homeownership Center, where I work, is a HUD intermediary that provides homebuyer education, homebuyer advising, and foreclosure prevention via a network of organizations across the state. We have been doing this for a little over 30 years, and our mission has remained to promote and advance successful homeownership for those facing the greatest barriers and working to close the racial homeownership gap.
Another important person I'd really like to introduce you to is Karen Larson. Karen works for the MMCDC, and she has done most of the heavy lifting, actually, as we've been putting this program together. So Karen, why don't you tell us about yourself and your employer?
Hi, I'm Karen Larson, Vice President of Mortgage Lending at MMCDC. MMCDC is a community development financial institution providing commercial, new markets tax credit, mortgage, and consumer lending throughout Minnesota. The state appropriated the funds for the First Generation Homebuyer Community Down Payment Assistance Fund and appointed MMCDC as administrator to manage and deploy the funds. We are working in partnership with the Minnesota Homeownership Center, the Minnesota Mortgage Association, and other key partners to bring this down payment assistance to Minnesota residents historically left out of homeownership. Thank you.
Thanks, Karen. Before I get onto this slide, I just want to mention that you probably noticed that Karen and Brooke and I all work for different organizations. And that's one of the beauties of this program that we've come out with. It's a forgivable second mortgage for first generation home buyers. And it was developed by industry people, by real estate people, and by nonprofits to really find a way to make a difference for home buyers in the state of Minnesota and to get over some of the pain points that we encounter sometimes with down payment assistance. Now today, we're going to cover for this program, and not Minnesota Housing's program, just remember, for this program, we're going to cover borrower eligibility, product terms, fund reservation, how to reserve funds for this program, what to do for a loan closing, your roles and responsibilities as well as others' roles and responsibilities, how to apply for funds, where to get information in the future, and then we'll address some questions at the end. Now, by the time we finish this webinar, we want to make sure that some key pieces of information stick with you. One is, I'm going to say it again, this is not Minnesota Housing's program. This is the community program. There's two programs out there. The legislature funded this one with $100 million. They also funded Minnesota Housing's first generation program with $50 million. There's slight differences between the two, so you should make sure that you go to both trainings. Secondly, it's important to know that this program is simply a forgivable second mortgage. You can use whatever first mortgage that best works for your borrower, And as long as it allows a forgivable second to be put on top of it, you're pretty much good to go. It's not a program like Minnesota Housing where they're going to dictate who the first mortgage lender or which first mortgage program you're going to be using. We also want you to make sure that you know how to prepare a borrower for this program. We're going to hear it several times, and that the borrower really needs to go through homebuyer education, and we'll tell you why shortly. We've simplified the down payment assistance program as much as we could with this new and, well, it's a new way of achieving down payment assistance. It's statewide. There's not a lot of overlays. There's not a lot of re-underwriting of the program, and you'll see that as we talk. And lastly, we want to make sure that borrowers that use this program are well educated. These are first generation home buyers. They might not know anything about buying a home or even owning a home. So we want to make sure that they're well educated and well guided through the process. Brooke? Now, of course, we all know that you can't do a loan by yourself. You know, it's impossible to do a financial transaction without an underwriter or a closer or a warehouse lender or whatever. And in this forgivable second program, it's the same way. There are some key partners that we need to work with to have a successful program. And one of them is Karen Larson and her organization, the MMCDC. They are, as she said, the administrators of the program. What that means is that the money has come from the legislature, from the state, and it's gone to the Midwest Minnesota Community Development Corporation. Now, they can't handle all of the applications that's going to come in for this program, all of the applications for this forgivable second. So they are enlisting the help of other nonprofit organizations that will also be down payment assistance lenders. There'll be other CDFIs, other local nonprofits, and tribe or tribal governments. So when you are applying for, or your borrower, I should say, technically is applying for this forgivable second, you're going to be working with one of these nonprofits. Another key partner in this program are housing counseling organizations. As I said earlier, these are first-time home buyers, or actually they're first-generation home buyers, may not know anything about buying a home and only heard the worst about owning a home. So home buyer education through housing counseling organizations is extremely important, and we want to make sure that each borrower goes through quality education. And of course, one of the most important key partners in this whole process is you, the first mortgage lender. Without you, this program wouldn't go anywhere. Without you, we wouldn't have designed such a thing to work for you. It's up to you to really guide these first generation home buyers through the financial process, get them this money, and help them close successfully so that they can own a home and build wealth for the future. And last but not least, our real estate partners. Those are the people that are going to be out, of course, talking to potential buyers and usually bringing them to us. Now, there's a lot of misinformation out there in the real estate world already, and it's going to be important for you to really know the facts, get the facts straight between this program and Minnesota Housing's, and make sure that your real estate partners know and understand those facts so that there isn't a lot of misinformation, confusion, and problems that end up at closing tables. Thank you. Brooke?
Thanks, Bill. So I want to provide a little bit of context. So in 2021, the Minnesota Homeownership Center established a cross-sector working group with the goal of better utilizing down payment assistance to narrow the racial homeownership gap. We wanted to improve the delivery system because, as we know, many both industry and consumers struggle with DPA and some of the challenges it can face in terms of funds running out or having the geographic limit being pretty narrow, etc. So we got together as a working group and said, how can we do this better? And then we also realized and knew that we needed more funding in our market. Home prices are continuing to go up. It's more challenging. It's more competitive. And so how do we get more down payment assistance into the realm? So in all of this discussion, we knew that there was an opportunity for the state to play a role in support funding. So in 2022, about a year after we started convening, we advanced legislation with some success, but no funding. We went back to the table in 2023 and efforts were successful, and we were able to, as Bill noted and Karen noted, receive a $100 million appropriation. So why first gen? So as many of you know, we have had down payment assistance in our market for many, many years. It's likely one of the reasons we have one of the top homeownership rates in this country. However, we also have some of the highest disparities in this country with a 50 percentage point between the difference between white households and Black households for homeownership. So we recognize that what has been done is not working. The proxies that have generally been used for down payment assistance have been first-time homebuyer and low to moderate income, and they just haven't worked. So we thought and decided that we would essentially ask for funds to pilot this concept of first generation home buyer. And will using the target of first generation home buyer lead us to better outcomes and make the difference, or at least help to make the difference in closing the racial homeownership gap. In addition, we also saw this as an opportunity to implement some of the best practices. So as I said, we were looking to improve the system as well as increase funding. So we have built this product based on those best practices and have a real opportunity to learn from this pilot, both the effectiveness of first generation and the effectiveness of the changes that we have made to this product, or how we have built this product. So here are some highlights that we're going to dive deeper into today. It's important that you know that at least one borrower must meet the definition for first generation buyer. I'm going to review that definition next. This product or this program allows 10% of the purchase price, so up to $32,000. So any purchase price less than $320,000 is going to result in a slightly smaller grant. For this program, as I mentioned, $100 million was appropriated. And so what does that mean in terms of actual number of borrowers we think we're going to reach? We anticipate about 3,000. Kind of the unknown factor in that will be what is the average size of the down payment assistance, how many people are purchasing homes below 320, et cetera. But we do believe that it's going to be about 3,000 buyers. Again, this is a pilot, and so once we launch, we have 3 years to spend down these funds. We believe it will probably take around 2 years to exhaust the funds, maybe a little bit more. But again, this is a 3-year pilot, and it's going to be available statewide. So another unique thing is that this product is available statewide with no geographic limitations beyond purchasing in the state of Minnesota. And while we do not have a hard set date, we are we believe strongly that this program will launch sometime between April and June. So now I'm going to talk a little bit about the definition and cover some of the eligibility questions. So there is not a universal definition for first generation borrower. Some of you may be familiar with local municipalities or Ramsey County's first generation homebuyer program. You are going to find that there are differences and nuances between each of the definitions. So it would be important that you really get a hold of this definition and make sure that you've got access to it. We've got a website we'll show you at the end, but just know that it's not universal, and know that depending on the program you're working with, the definition will vary. So for this program, for the First Generation Community Fund, the borrower and their parents or legal guardians have never owned a home in any country. Just bottom line. There is no gray here. It just is. So the borrower or their parents or legal guardian have never owned a home. The one exception will be if they owned a home and lost it due to foreclosure. That ad was very intentional because, as again, we are working to close the racial homeownership gap in our state. And many of those who I would say suffered during the foreclosure crisis and who were preyed upon during the foreclosure crisis were the exact first generation borrowers we are trying to reach through this program. So again, borrower and their parent or legal guardian never owned a home in any country. So this will be documented through self-attestation. The buyer will sign an affidavit, and that will be the verification that we will use for them meeting this definition. So a little bit more on borrower eligibility. So again, at least one borrower must meet the definition of first-generation buyer. That borrower, the first-generation borrower, must complete homebuyer education and be a resident of Minnesota. The co-borrower, so if there's more than one borrower on their application, they do not need to be first-gen, but they are required to be a first-time homebuyer. And the definition that we are using for that is no ownership interest in a principal residence in the last 3 years. This is super important to understand, and it's important, again, I'm just going to note that the only exception here is if the first generation buyer lost their home or their parents lost their home for foreclosures. But the thing that I really want to stick with you is that they or their parent never owned a home. Some of the things that came up in a couple of other training sessions we did was, well, what if the parents are no longer living? Or what if the parents no longer own a home? And again, it has to be that the parents never owned a home in any country. Bill, I'm going to turn it back to you.
Yeah, thanks, Brooke. All right, homebuyer education. I had said this earlier that homebuyer education is super important for this particular program and for the borrowers we're working with. Again, they're first generation homebuyers, perhaps have no understanding of what it's like to own a home. They maybe don't appreciate the commitment or the financial benefits of owning a home, and probably have no idea how to even go about purchasing a home. So homebuyer education in this case is extremely important. So every first generation borrower has to complete a homebuyer education in at least the last 12 months. Well, has to be within the last 12 months and has to be prior to submitting a purchase agreement. So this is one of those things that we need to tell our real estate agents. Don't get the first generation borrower out there and excited about housing before they go through the home buyer ed course. Okay. Now there's certain home buyer education that'll work for this program and others that won't. So I want to stress that right now. Let's look at option 1 on the screen. You can complete, or your home buyer can complete an instructor-led program or a live virtual course using Homestretch, Realizing the American Dream, or Pathways Home. Now, in the Twin Cities, at least, and I think through most of the state of Minnesota, Homestretch is the one that's used most often for workshops. I know there's lots of those going on in the Twin Cities right now and over the next few months. So that's one option. The other option is to do a self-guided online program through Framework Homeownership. I think you're probably all familiar with that one. That one does cost $75, where most often you can get into Homestretch for cheaper than that or even free. Now, what's not acceptable is Fannie Mae HomeView and Freddie Mac Credit Smart Homebuyer U. So just because they might have gone through one of those doesn't mean that they qualify for homebuyer education. They still need to go through one of these other programs instead. So don't think that Fannie Mae, Freddie Mac, or some mortgage insurance education system is going to work for these buyers. They have to go through either, let's just say, Homestretch or Framework at this point. Brooke, could you? Thank you. Now, when we were doing this live, I made sure that we all read this particular slide out loud. So I'm going to read it slow. If you want to read it out loud with me at home or wherever you are, that's great. It's borrowers who complete homebuyer education after signing the purchase agreement are ineligible and may not apply. Again, they have to go through homebuyer ed before signing a purchase agreement. You know, that part is so important. It was actually written into the law that we have here in Minnesota for this forgivable down payment, forgivable second mortgage. The law reads, a qualifying first generation homebuyer, so somebody who's not just a first-time homebuyer, but a first-generation homebuyer, must complete an approved homebuyer education course prior to signing a purchase agreement. If you want to go to the Minnesota Revised and read the law, it's right there, but it's that important that they put it right into the law. Brooke? Thank you. So borrower eligibility for application. There's income limits on this program, but we tried to simplify that. If you're familiar with using Minnesota Housing, as I am, there's household income limits. So you have to look at not only what you're using for qualification, but what other income there is in the household and whether that will put you up over the limit. In this case, we're trying to make it simple. We're just saying it's the qualifying income cannot be over the limit. So if you're familiar with, say, Home Ready, say you're doing a Home Ready loan in the Twin Cities, the limit is, I think, $99,440 in most places. If your income is over $99,440, the qualifying income, the income you have on your application is over $99,440, you're not going to qualify for Home Ready. Of course, if your base income is say 95, but your base with overtime puts you up to 105, you usually just use your base income and don't use the overtime so that you qualify for Home Ready. You can do the same thing with this program. Just make sure that your income does not exceed the 1 to 2 person household income limit that's listed on Minnesota Housing's website. So right now, the Twin Cities metro area is 124.2. Dodge and Olmsted counties are 118,000, where all other counties are 111,700. If you happen to be using this forgivable second with, say, Home Ready or Home Possible, the qualifying income that you're using is definitely going to be under any of these levels, so you'll be good to go. Brooke? Also, for borrower eligibility, this one is super important. The borrower has to have an underwritten pre-approval for a mortgage that meets a QM definition. Now, when I say underwritten pre-approval, I don't mean that you just ran it through an AUS, that you ran it through DU or something. I mean that you ran it through all that, submitted it to underwriting, and an underwriter signed off on the pre-approval. It's a little bit more than what we might usually do for pre-approvals. But again, these are first-generation home buyers, and we want to make sure that A, they're really qualified, and B, when they're making offers, you can tell the listing agent and the seller, no, these people are good to go. They're actually really approved by underwriting, and they have funds reserved, which we'll talk about how to reserve funds here shortly. Let's see. One other point to note is non-occupant co-borrowers and non-occupant co-signers are not allowed in this program. Okay, Brooke. So to recap borrower eligibility, if you're taking pictures of screens, take a picture of this one right now while I'm reading through it. So one borrower has to be a first-generation home buyer and a current resident of Minnesota and completed education within the last 12 months. And make sure that they complete either, say, framework or a home stretch workshop. Homebuyer education is an approved course and completed prior to signing the purchase agreement. The combined borrower income meets the guidelines for Minnesota Housing's startup loan for a 1 to 2 person family, regardless of household size. And the borrower has an underwritten pre-approval for a mortgage that meets CFPB QM definition. So that's the requirement of, or the recap of borrower eligibility.
Great, thanks, Bill. So I am going to go ahead and just share a poll with the group. Let's see here. So you should see this pop up on your screen, and we'll just give it a minute for people to respond. Great, we've got quite a few responses. We have got, I think, 99%, so we'll give it just another second here, see if any other responses come in. All right. I am going to go ahead here now and end the poll, and then we should see the results. So really great results. Only 1% answered false. So once again, just to remind you, the buyer, this is actually true. The buyer must complete homebuyer education before they submit an offer purchase agreement. Okay. Before they sign, submit, make an offer, they need to have homebuyer education completed. All right. So now we are going to move on to talk a little bit about applying for funds. So the borrower is actually the one who applies for the funds. Once this program launches, what will be available will be an online intake form. The borrower will click on that online intake form. They'll have to provide some basic some basic information about their household. So household size, we'll ask of, some data about household income, number of children, etc. And none of that has anything to do with them being eligible. But what that does is that helps us tell the story about who is actually accessing these funds and if we're actually achieving the goal of helping to narrow the racial home ownership gap and who we are reaching. So when the borrower logs in, they'll again confirm their eligibility, provide some basic household data. They will also be asked to upload that homebuyer education certificate, and they will also be asked to upload the mortgage underwritten pre-approval letter. And these funds are going to be available on a first come, first served basis. So in the order of how buyers, as they apply and submit this form online, will then essentially put them in place in the first come, first served order. So once the borrower submits the online form, they will be assigned to a DPA lender. So again, as Bill mentioned in the very beginning, MMCDC is the lead administrator, but there are also going to be DPA lenders, nonprofits, CDFI, tribal governments throughout the state who also help us actually deploy these funds and will originate this second. And so the borrower will be assigned to a DPA lender. MMCDC has put out an RFP and is currently reviewing submissions, and we anticipate that the DPA lenders will be about 8 to 10 total statewide, and those will be selected shortly. And then MMCDC will begin to work with them on their role as a DPA lender and getting them ready in advance of this launch. So as we talked about, we're going to reach about 3,000 buyers throughout this pilot statewide, and the goal in the first 12 months is to originate about 1,000. We anticipate that when this program first launches, we are going to get a flood of interest. We do expect it to level out over time, and as I mentioned, we think that these funds will be available for around 2 years, give or take. Part of this is going to be about capacity. So while there might be high interest on the front end, we believe that we'll be able to essentially originate about 100 loans a month. So there is going to be potentially a little bit of a delay in the beginning until we get going and get over kind of the initial excitement and kind of mass application. We also know that this is a kind of first of its kind. So we're going to be learning as we go. So if we find that a bunch of people are applying online who actually haven't completed education or don't have the full underwritten pre-approval, or this kind of intake form isn't making sure that we're getting through the people who are actually eligible, we will pivot. So we are committed to making this work. We understand that this is an exciting opportunity, and it is also something, again, that is a little bit unprecedented for our state. So we're going to be nimble and we're going to be responsive as we go. So now I'm going to transition from application and talk a little bit about fund reservation. So as I said, let's just say I'm the first generation buyer. I've completed my home buyer education. I've met with my amazing loan officer, Bill, although he no longer originates. And he has helped me understand this. We have verified that I qualify income-wise. So I go online, I do this intake form, I list some information about my family, I upload, and then I wait. And then I get a notification after a little bit of time that I have been assigned to a DPA lender. And so now I'm going to get moving into this space where I'm kind of going from intake to application. And this DPA lender is going to work with me to get me to the point of reserving funds. So one of the reasons why we have built in this fund reservation is because we heard from many industry and consumer alike how difficult it is to use down payment. Your average program right now, you cannot even apply for the down payment until you have a purchase agreement. And I'm sure some of you have had the experience where then by the time you get to closing, funds may or may not be available. So having funds reserved guarantees that the borrower is essentially, these are their funds for at least 90 days. For me, if I'm out shopping, having this funds reserved, it's going to increase my confidence and likely my buying power because I know that essentially I am pre-approved for these funds. It's going to reduce uncertainty for sellers and it's going to streamline the closing process. So again, kind of getting back to this, I've submitted my form. I've been assigned to a DPA lender. So now what happens? So the DPA lender is going to verify that I'm eligible. I'm going to sign attestation that I'm a first generation buyer. My co-borrower is going to attest that they are a first time buyer. They're going to see my pre-approval that says I'm income eligible. And they're going to see that I've completed home buyer education. And then I'm going to sign a release of information, and that DPA lender is going to reach out to my loan officer, Bill, and Bill is going to have 10 days to get an official form signed off by the underwriter that said he actually did his part and did the pre-approval underwriting, and that in fact I am qualified. And then after that, the DPA lender is going to issue this reservation letter, and now I'm going to start shopping for our home. So a little bit more about the fund reservation. So again, it is valid for 90 calendar days. Now, there will be the opportunity for the DPA lender to extend this. So if I start shopping and I'm really frustrated and I just say, you know what, this is not for me and I'm kind of given up, the DPA lender is not going to extend this for me. I'm going to make the decision maybe that I'm even backing out. But on the other hand, if I really decided this is for me and I've been looking with my realtor and I've even made some offers or I attempted to and I just haven't been able to find the right house, the DPA lender is going to give me an additional 60 days. So instead of the 90, I would be given 150 days to find the home that is right for me and my family. Now, if at any time that fund reservation expires, I would be required to go back to the beginning and reapply and submit the intake form and get back in line. But we anticipate that most buyers who are actively looking and ready to make this move are going to be able to hopefully find a home within that 90 to 150 day period. So now what happens? So I've got my reservation. I've been shopping, so excited. I found the home, can't believe it. Perfect neighborhood, exactly where I want to be. And I've signed and submitted a purchase agreement. So once the seller accepts my offer, then Bill, my loan officer, is going to reach out to the DPA lender and he's going to get that signed purchase agreement along with some other forms to the DPA lender. And that essentially starts the clock. So one of the questions that comes up quite a bit is how much time does this program need for closing? And we have set a universal standard of 35 days. So once my purchase agreement is to the DPA lender, the DPA lender then needs 35 calendar days to prepare for closing. At this time, the DPA lender will issue a commitment letter. So that's kind of moving me from reservation to commitment of saying, yep, you've got a closing scheduled. You now have a commitment letter in hand. Once we get a little bit closer to closing, the DPA lender is going to send the closing package to the mortgage lender and title company. And there are some forms that will be going back and forth during this time frame. And those of you who have done DPA for your buyers in the past know that there's a lot of form trading between the loan officer and the DPA originator. But ultimately, the goal of this slide is for you to just kind of see the high level process of what will happen. So the DPA lender will provide the closing packet and they will also wire the funds directly to the title company. A few more highlights about the commitment period. So again, the purchase agreement must be signed and accepted. We have heard that sometimes lenders kind of push to reach out and get it moving, or realtors will to get it moving and say, hey, we've submitted a purchase agreement. Can we start preparing for closing? And the answer to that will be no. It will be important that it is a fully signed and executed purchase agreement. Again, 35 days from the submission is needed prior to closing. The commitment letter is valid for 60 days. As we know, sometimes closings are delayed and things happen. So we want to build in enough time that is, kind of accounts for the most common experience for buyers. We don't think that it's going to be very common, but if there are renovation or new construction loans, there are some additional times for the commitment period that will be detailed out and available as we get closer to launch. One important thing that I want to call out is, sometimes things happen. I've made this wonderful offer, and let's say the appraisal came back and it didn't meet sales price. Or I've had my I've had my home inspection, and there's $7,000 of essential work that needs to be done, and the seller and I can't come to terms. So if something happens where the mortgage lender rejects the contract, or the borrower opts to call the inspection contingency, a new reservation letter will be issued. So I wouldn't have to go to the back of the line and start all over again. What would happen is I would get a new reservation letter with a new 90-day period to start shopping again. So we built that in because we know that things do happen, and we don't want buyers to back themselves or make decisions on homes that turn out to not be in their best interest due to the condition of the home, or again, if there's something that's completely out of their control, like a valuation gap. So just some highlights for loan closing. So this product can be layered with other down payment assistance, and it can be in any lien position. Those of you who do down payment know that once you get into layering multiple programs, it can be a heavy lift, and there may be other down payment programs that have more restrictions than this one. So when we designed this program, one of the reasons why we did 10% of purchase price up to $32,000 is that we were hoping in most scenarios the singular DPA would be enough, and that the buyer wouldn't have to deal with the restrictions or the burden that comes with layering multiple programs. So cashback is not allowed. It's very limited circumstances, like verified earnest money deposits that exceed the borrower's out-of-pocket expenses. Again, the funds will be wired to the title company by the DPA lender. The borrower will essentially do the loan document and closing at the mortgage closing. So it's one closing experience for the borrower. And then I just want to call out that it's going to be super important that you are openly communicating with the DPA lender. The DPA lender is going to rely very heavily on the loan officer to essentially, communicate and let them know if there are any changes. And it's important that if there are undisclosed changes, like someone is no longer income eligible or a variety of things that could happen, it can result in the cancellation of a commitment letter and the closing essentially falling apart. All right, so just a very quick recap of reservation to closing. So again, the borrower completes homebuyer education and has an underwritten pre-approval for a first mortgage. They then complete the online intake form, which, just to say out loud, is not currently available, but will be available once the program launches. And then on the back end, they're assigned to a DPA lender. The borrower eligibility will be verified by that DPA lender, and then the DPA lender will essentially issue the 90-day reservation letter. Once the purchase agreement is executed, it's submitted to the DPA lender, and then a commitment letter is issued that has a 60-day calendar time period on it. So lots of information, and I can see that the question box is ticking up after every section that we get through. But we are going to take a little quick pause here, and we are going to do another poll. So let's go ahead and launch the next poll. So again, you will see this, and please take a moment to complete the answer. Quite a few responses already. About half the group has already responded, so we'll give it here just a little bit more. All right, I'm going to end the poll. We have most responses in, and I will share those results with you. So, Bill, I did not get as good of a turnout as we did after your presentation. So I just want to, I'll hit this point again. And Bill, if you've got anything to add, please jump in. But essentially, the answer is false. So underwritten pre-approval is a requirement for your buyer to go online and complete that intake form and essentially apply for the funds. If they do not have an underwritten pre-approval, they should not be applying for the funds. And as Bill said, it is an underwritten pre-approval that has been signed by an underwriter. And depending on who we're talking to, this is either no big deal or a very big deal. And so I understand that it varies depending on how your organization runs. But this is an essential part, as Bill mentioned, of preparing the buyer, having them fully qualified. And because we are using lender qualified income, it's important that we know that the buyer is actually eligible. So it is a little bit more front end work for some, but will have a great impact for the buyer in their experience. So I'm going to stop sharing those results. Thank you for everyone who completed that. And let's move to our next slide.
All right. Well, thanks, Brooke. I think you probably didn't get as much of a response because you sold me way too hard as being a good loan officer. I almost thought maybe I should get my license again, but I'm not going to. I'm not going to reactivate that. It's too much work. All right. So use of funds. As Brooke had said, the funds, you can get up to 10% of the purchase price with a maximum of $32,000. Now that money can be used for down payment, buyer settlement costs, and principal buy down. And yes, you can layer other down payment assistance programs with this. But if you do, like Brooke said, there might be other overlays that you need to consider and maybe more time if you're using multiple DPA. Now, more importantly is what can you not use these funds for? They cannot be used for FHA's minimum required investment. Okay, that 3.5% down, you can't use this money for the 3.5% down that's required for FHA. The reason is that FHA has this old rule that says that if it's a non-government entity that's, giving the loan out, that can't be used for the MRI. It's a rule they have. So therefore, actually, Minnesota housing funds can be used for down payment for the minimum required investment, where these funds cannot because we are not a government entity. Okay. You also cannot use these funds for seller closing costs or to cover a value gap. Next slide. Repayment of funds. So this is a secured second mortgage. There's zero interest and there's no payments, and it's forgiven over 5 years. It's forgiven at 20% per year on the anniversary date. No partial amounts during the year. So when you're talking to your borrower, make sure that they know they need to stay in the house for 5 years to get the full forgiveness. They have to stay in the house for the full 5 years to get the full forgiveness. If they're there for 4.5, they're only going to get 4/5 of it forgiven. Okay. And the balance is repayable if the house ever converts to a non-owner occupied occupancy. If the property is sold, if there's a foreclosure or an ineligible refinance. Most refinances that are rate term that lower the payment or other refinances that allow the second mortgage to be subordinated are going to be fine. But if the people refinance into a non-QM mortgage or some other thing, it's going to be called. So that'll be handled by the servicer, who will be the DPA lender that you're assigned to. in the future, but that's when the balance is repayable. Brooke. Eligible properties, they have to be owner-occupied principal residences, only 1 to 2 units, not 3 to 4 units. So single family and duplexes only. Townhomes, condominiums, co-ops, manufactured homes that are titled as real property you can also finance those. You can use shared equity loans, community land trusts, and things with other resale restrictions are allowed. This is, of course, limited to properties in Minnesota only, Minnesota properties only. And they must occupy the home within 90 days. I think someone made a comment, if I remember, Brooke, that most mortgages say that you have to occupy in 60 days. So this is just a little bit more liberal than that. Next slide. So first mortgage. As I said earlier, this forgivable second can be paired with any first mortgage that has a fixed rate, is fully amortizing, and meets QM definitions. And that includes Sharia compliant and ITIN products. What's not allowed is a first mortgage that's an adjustable rate mortgage, a negative amortization type loan, a balloon, or some kind of interest only loan. Next slide. Now, we tried not to have any kind of weird overlays with this down payment assistance program, other than being a first generation home buyer and what goes along with that. We don't have specific qualifying ratios or minimum contributions or pricing that's required for the first mortgage. That's all determined by your first mortgage program, okay? If that has a qualifying ratio or a minimum contribution, then you got to go with that. But this program is not throwing any overlays onto your first mortgage. There's no minimum housing ratio. And one thing to note, as a mortgage lender, you can't add an additional fee for this program. So you can't be putting something on the CD that says processing fee for first gen program or first gen processing or first gen underwriting or whatever. Just use your normal fees, nothing extra for this program. Next slide, please. Brooke, this is you.
It is me, Bill. Thank you. So just to, say again, and I think we can't emphasize this more, it was a cross-collaborative, cross-organization partnership that led us to being able to bring these funds to Minnesotans. And I think, this product and deploying it is going to require everyone to play their part. So specifically for the DPA lender, I just want to be clear that they will be the one that will be affirming eligibility. So they will be the one doing the attestation for first generation and first time home buyer for co-borrowers. They will be working and contacting the mortgage lender to verify underwriting pre-approval. They'll issue reservation and commitment letters. They'll provide the necessary documentation to the mortgage lender, and they'll prepare the closing packet as well as wire the funds. So these are going to be kind of their key responsibilities. But again, as I mentioned, we're going to rely heavily on the partnership between you guys and the DPA lenders. And while an example I'd like to give is, if let's say the DPA lender has done attestation and the co-borrower says, yep, I'm a first gen, and then you're perusing through the credit report and you see that they've had some ownership in a home or a co-borrower on a home and aren't actually a first-time buyer, that would be something that we would ask you to reach out and let the DPA lender know. So again, kind of this partnership of both working together to help make sure that we have successful closing transactions, but also to help make sure that we are getting these dollars to borrowers who are actually eligible, and demonstrating to the state that this is a great program and a way to really reach those that have been left out of homeownership, and that we can demonstrate that this pilot shows how we can be more successful with down payment assistance. So we need everyone's help in making sure that we don't blow it, and that we really do this the right way, and that we show it is possible to make DPA simpler and to reach those who have not had the opportunity to achieve homeownership.
All right. Brooke, you reminded me of the Super Bowl. Seriously, there was I I'm kind of a football fanatic, and I don't know if you saw after the Super Bowl, but there was an offensive lineman for the 49ers who publicly ripped on one of his teammates, one of his other offensive line teammates, for missing a block at the end of the game that basically led to the 49ers losing the Super Bowl. And it's not even clear if it was his block or the other guy's block, or that's not important. What's important in the story is that guy ripped on one of his teammates publicly. Now, we all know that when we do loans, we do residential finance, you work together as a team. You have to, because we can't do these things alone. As much as we'd like to do things alone sometimes, because someone else dropped the ball or made a mistake or didn't say the things they want them to say. You just got to work together as a team. So my point about the Super Bowl is, don't be that offensive lineman. We all have stressors, we all have problems, and things don't always go right, but don't publicly shame your own teammate. It just isn't good. All right, I'm sorry. Moving on. Mortgage lender responsibility. It is responsible. It is our responsibility as loan officers, as first mortgage lenders, to get an underwritten pre-approval to verify income eligibility. Remember the number 122.4 if you're in the cities. Make sure your income, the qualifying income that you're using, is not over that number. Notify the DPA lender of any borrower changes or discrepancies. Just like Brooke was saying, if there's something that shows up that you go, how come you're showing up on this mortgage on your credit report? Or your income's coming in way higher than I thought it was going to be. Then report that to the DPA lender. And then use the required closing documents and instructions, which will be coming along and listed on the firstgendpa.org website in the future, and provide the required documentation to the DPA lender. There will be a list of documentation that the DPA lender will need, which really isn't going to be a lot, but it'll be listed as well at firstgendpa.org. Next slide, please. All right, opportunities. For us first mortgage lenders, for us loan officers, I still talk about myself as a loan officer. It's 40 years. It's hard to get away from that. This is a first of a kind statewide program. We've made some, like I say earlier, we've made some changes in this program to make DPA more palatable, to get through some of those pain points and to really help a particular segment of the population. It's more of a streamlined approach. We don't have a lot of duplicate underwriting and overlays. We're making sure that the borrowers are prepared up front so that they're very well qualified and strong buyers when they're making offers, therefore being more competitive. And again, like Brooke had said, we feel that this program should be available for the next 2 to 3 years. And something that's not listed on this slide, but I think is really important to lenders, first mortgage lenders, and particularly company owners, is that you're using your own first mortgage product with your own first mortgage pricing and your own margins. This isn't one where you're going to be dictated a certain margin because you're using a product through a government agency. It's your loan and you determine your own margin. You're not taking a hit just for doing a good loan. And Brooke, I think.
Yeah, that brings us to near the end. So thanks, Bill. We're going to just take a few minutes to review the firstgendpa.org website, and then we will take a look at some of those questions that you guys have posted. So let's go ahead here and share this. All right, so this is the website that we are essentially, if there's any first thing that you do when you leave this webinar today is that you check out this website and you go and you sign up for the updates. This website is really going to be the best source of information We are hearing a lot of misinformation already being spread. And the way to combat that is not to carry on the message that your colleague may have shared with you or what they think they heard, but instead is to go directly to this website and answer the question yourself. So on this website, which will continue to be updated and evolved, what we currently have right now is we have the trainings that are available. So this training here that we have today. By early next week, you will see actually instead of this register for the webinar, you will actually see a video here that you could spend the time because you enjoyed Bill and I so much rewatching, or more importantly, sharing with those in your organizations and in your networks that may not be aware or may not have had the time to participate today. On this site, we also have product terms. So everything really that Bill and I talked about today is found under these product terms. So eligibility and co-borrower and income. There's information about homebuyer education, including the links to find a instructor-led workshop or the link to the self-guided online course framework. There's a lot of wonderful information here, and this is going to be your go-to source. So we also have on here, and as Bill pointed out, once again, you are on the webinar for the First Generation Homebuyer Community Down Payment Assistance Fund. This is not the Minnesota Housing Program. They are going to have their own program and their own trainings. We understand, though, that it's confusing. And so we did add this high-level comparison between the two programs. I will call out that Minnesota Housing also has a dedicated webpage that you can visit that'll have the information and that they'll continue to update as more information becomes available. But just at a very quick glance, you can see some of the differences and similarities between the two programs on this comparison found at firstgendpa.org. The biggest difference is going to be probably how the amount of assistance is calculated, the loan terms and repayments. In terms of this program, 20% is forgiven annually, fully forgiven after 5 years. Minnesota Housing has a different approach, 50% forgiven at 10 years and the remaining at 20 years. The income limits are similar, but there is difference in how they're calculated. But the other major difference, I would say, is that this product, the Community Down Payment Assistance Fund, can be really used with any eligible first mortgage. It is about what is the best mortgage for the consumer. And with Minnesota Housing's program, it is essentially following their startup loan products. So you have to use the startup and follow kind of their practices of using startup loan and their down payment assistance. So great information on here. There's also some FAQs. And then again, I would encourage you, if you were to do one thing today, would be to go back and, go to this site and sign up to receive updates. So as we add new information to this website, we will send out updates to tell you to check back in because there's no new resources. So prior to launch, we'll be adding forms here, some of the tools that you will need to access these to help kind of, do your part as we move forward with origination. The mortgage and the note, I know many of you are thinking, hey, I'd love to get this approved internally. Once that's available, the mortgage and the note will be, as well as the term sheet, will be on this site for you to use as a resource. So I encourage you to check it out. And I'm going to go ahead and stop sharing my screen. And I just want to say thank you to everyone for participating today. This